Hi guys, and I hope that you're all keeping well and keeping safe. So I want to explain market structure to you and try to make it as simple and as easy as possible. Now, what I've noticed is that some of you are making market structure a lot more difficult than it should be, and understand the way that I taught it is a little bit difficult. Is a little bit different and difficult to grasp the concept. However, the reason I've done that is so you can understand what minor structure breaks actually are, because that's probably the hardest part to understand, and the fact that you can understand it is a step forward. But you don't need to overcomplicate it. Now I'm going to show you simple market structure, and I'm going to show you when is key and when to understand when market structure is shifting to the opposite side, whether it's going from bearish to bullish or bullish to bearish, right? And then I'm going to explain confirmation entries, and I'll go through an example, and hopefully this will click and make things a little bit more clearer for you. So with market structure, right, let me draw a bearish trend. Okay, so for a bearish trend, right, we need new lows to be forming, right, and we need new lower highs, lower highs, lower highs, lower highs, and so on. Yeah, that is key for a bearish trend to maintain. Okay, now every time that we get a break of structure, we have a correction, which is this part here, and this part, and so on. In this part, obviously, you will get this sort of movement, right? So although you got this, you'll have this pullback, okay, and then you get a dip again. Whatever happens in here, you have to realize this is intraday, it's not swing. Okay, if you are going to trade it with caution, knowing that it is still a bearish trend. Okay, now if I draw that in big for you, right? So let's focus on one part. So you got a pullback like this, price reaches in there. Okay, so this is our entry or POI. Okay, now whatever's happening in here, so say this is the daily, yeah? There we go. Say this is the daily time frame. Whatever's happening in here, in this area, okay, is all intraday. Yeah? So whatever happens here, we don't need to overly worry about. However, when you do trade it, say if you are taking, say you got a breaker structure here, and you're entering off an OB here, right? If you are taking it, you still have to realize that this up here is your POI for your overall swing position, right? You cannot forget that. When, for example, if you were to get this situation, so if I get rid of all this for a moment, if you were to get a situation where you would get this, yeah, now some would see this breaker structure and try to enter here. However, why would you do that? Because it's not come to your point of entry. It's probably like 20 or 30 pips away. I'm just going to making that up, by the way, but it's probably a good few pips away. So why would you want to? I don't know why I keep doing that. I don't know why you would want to enter there. You have to realize for the market to function, traders need to lose, right? So when price is moving the way it is like this, okay, all it's doing is enticing sellers to come in, right? So they can be taken out. Now this is where the whole point of liquidity comes in. So if you think about it this way, so liquidity, okay, liquidity, when you have things like this, right, you've got equal highs, there is liquidity sitting here, yeah. I'll draw three just to emphasize the point. There's liquidity sitting here. Now, for us to be interested, we need that liquidity to be freed. We need it to be broken, and then we can look to enter the trade. Sorry, we'll probably enter the trade like this, right? We'll probably enter here. Now, the same thing if we were looking at equal lows. Now, equal lows, okay. There is liquidity sitting here. We'll look to enter here once the liquidity has been taken, which is there. However, there's a different way to look at liquidity. Now, if, for example, we look at a downtrend like this. And sometimes you get a move that goes like this and comes back down. And that move that goes above it is just a wick, and it comes straight back and back down here. You have to realize that above every high, there is liquidity sitting above. Okay? The reason being is because you've got breakout traders that will be placing buy stops here, here, here. Okay? And we'll draw one here. So the buy stop will be here, for example. So sometimes you get price that comes and grabs the liquidity and then drops, right? That's grabbing that liquidity and then taking them all out. And then that's where our point of interest is, because that's where we know that there is an OB there. When liquidity has been grabbed, there's an OB present there, right? That's the reason why we focus on this, the wick trick, because that is grabbing liquidity from whatever's previous, right? And then price continues going down. And then we enter on the retrace on either the base or the 50%, depending on where the OB is on how you want to enter. And exactly the same principle. So above every high, you've got liquidity. So when you get, so this is the idea I'm trying to bring is speaking about fake outs. Now, some of you say that you get faked out. So for example, you're in a trend, you've got a broken structure, right? And some of you will try to enter here, which is fair enough. It's completely valid. But then you get a breakout, you get a fake out, which is like this, a wick, and then the price continues. But that is the reason why he's doing that. So this is why I'll go into confirmation entries. Okay, so say this line that I'm about to draw. Okay, this is our POI on the higher time frame, right? We've got price approaching like this. Like that, okay. Right, as you can see, price is obviously perfectly retraced. We're perfectly retraced to our point of interest and reversed, right? Now, sometimes what's good to look for is, because what you can see is we have broken structure to the downside here, yeah, which indicates that price is probably going to be bearish. However, you have to remember there's liquidity sitting above each of these highs that's coming up, right? There's liquidity sitting there. It's perfectly valid to look for an entry here, okay? It's perfectly valid, okay? Because we've got a breaker structure and price can obviously just react here. It doesn't always grab liquidity. Price can just react here and then drop down. It's perfectly valid, yeah? There's no problem with doing that. However, if that does happen, if you do get that move where it grabs liquidity first and then comes back down here, that's how you know that this entry this is going to be your next entry. That is going to be the solid entry. This is the high probability entry, right? So you can get the first entry, which would be here, and second entry here, okay? So whatever you do in the second entry, right, it will make up for your loss as well as continue the trade. And generally this could be the one that is reactive. If price doesn't react from this point of interest here, okay, and say if it grabs liquidity, this is going to be your winner, okay? Which is why it's not a problem if you lose in the first trade, because there's always a second entry. And if you miss this one, okay, you've got this entry, you've got this one here, okay? Now this is where we're going to talk about structure shift. So let me get rid of all this. There should be a quicker way to do this. I'm not sure, to be honest, but we'll see. So we've got structure that's going like this, and then we've got a structure shift going there. Okay, very roughly drawn. Now to know, there are two things, right, to understand market structure and when it shifts. Okay, first you need a breaker structure, okay, and you need a failed structure. Okay, you need those two things, and I'll show you exactly what I mean. This is number one, okay? This is our breaker structure. This is our failed structure. The reason being, it's failed to make a new high. It didn't continue this uptrend that's obviously going, yeah? So it creates a lower high. So now, these two together indicate a structure shift. And this is exactly what we look for when the price reaches our POI, which will probably be about here. Okay, now when you get the breaker structure, as I said, sometimes you don't get, sometimes you don't get a reaction from this OB. Sometimes you grab a liquidity wick that will go up and then come back down. But as I said, this entry here would be your, let's just say, how do I emphasize how good this entry would be? This would be your most secure entry. Okay, it doesn't always come up this clean, and I'll show you an example. It doesn't always come up like this. However, when it does, you know that this is the one. This is the one that you need to get on. If you miss this first one, or if you get stopped out on this one, okay. Generally, you place your stop loss above, but the liquidity wick would have taken it anyway. But if you miss this first one, this is the one that you're going to be looking for. So if I show you an example that we have here. So this is on AUD USD, right? So we've got our point of interest here, okay? Now, I've tried to mark it as clearly as I possibly can, okay? So we've got, so if we talk about market structure, okay, we got the high, and then we got a lower high, and then we got a new high that's been formed, right? But then we've got a breaker structure here. Okay, now that's indicating a possible structure shift. But what do we need next? So this is number one. That's number one of understanding market structure shift, right? This is number two, because it's failed to make the high, it's made a lower high, and then what's it done next is broken structure. So our entry point, So our entry point is going to be at this OB that's sitting here. Okay, it's going to be somewhere in there, yeah? Now, obviously, when I refined it, there's a 1 minute entry sitting in there, and that's exactly where it reacted off. This is very high probability, I can't even say it, high probability trade, okay? Purely because price has no reason to come and break this high. It's got no reason to do so. So that is why this is a high probability trade. So I'll post this into the Discord for you guys to keep as a cheat sheet, but this is pretty much the generic entry point that you'll be looking for, right? So if I summarize it, okay, when you have a bearish trend, right? Or no, sorry, a bullish trend, yeah, you have price approaching your POI, this is what you'll be looking for, okay? You'll be looking for price to fail, okay, to make a new high, to create the ongoing trend, and you would want a break of structure to happen. Now, as I said, what you could have done here, and this is what our first entry would have been, is you could have entered obviously off an OB here, okay? That probably would have been the OB, unless there's something sitting in this wick, okay, for you to enter. But that would have been the OB for the first entry, and you may or may not be stopped out there, which is fine. Sometimes you do get wicks that come above it, right, and then you come back down. This wick here has grabbed the liquidity of whatever's above here and then broken structure. So price has already done that. So price has no reason. There's no reason for price to come up here. Okay, it's no reason to come up here. Okay, but if you miss this entry, this is the one that you need to get on. Okay, as I said, it's the high probability. Now, as I said, it doesn't always happen as clean as this, but when it does, obviously, you know that this is what you'll be looking for. And sometimes price can take a while before coming back, but it's not really an issue in that sense. Okay, you don't need to really worry about it. So yeah, that's how to understand market structure and market structure shift. Okay, and to be a bit more of a safer trader in terms of your safer entries, you're better off just waiting for this. If you're struggling to understand what the first breaker structure is, and some of you find it difficult to take the loss that happens, for example, if you do get a liquidity move and then a drop like this, yeah? So if that is the case, look for this one. As I said, it doesn't always happen like that, but you're better off if you're worried or you want a higher win rate and a higher probability. You're better off waiting for this. However, this entry is the one that I generally go for, and if I get stopped out of this entry, number one, my entry is number two, and that's the one that I know will do well if number one stops out. Number one is obviously the place that you want to enter because it's at the extreme high, but number two is the clear, reasonable entry. So that's just to understand the story behind it, because when you get a market structure shift, okay, you need two things. You need the breaker structure, okay, which is here, and you need hold on, let me get rid of everything that's here. So for market structure shift, you need two things. You need a breaker structure and you need a failed structure. Okay, same thing if it's bullish, you need a breaker structure and a failed low. Okay, so in this chart, it's going to be the opposite to this. I don't know if can I turn this? Oh, yeah. So for a buy, it doesn't really work, but it'll be the opposite of this. Yeah, it'll be the opposite of that. That didn't really work, but so you need one. And you need two. This is going to be your first entry that we'll look for, the breaker, because we've got the breaker structure and the order block, right? And if that stops out, you've got your second entry here. Okay, so two possible entries and two valid reasons. If you miss this one, then that's your next point of interest. So you would hope that price would come here and then come down. If your order block is correct, price has no reason to go back. As I've done here, this is your break-even point. Once you move broken structure, you're at break-even anyway. So it doesn't matter what price does afterwards. If you get stopped out at break-even, it's not really an issue. It's not really an issue at that point. Or as this is the nearest structure, this point is your nearest structure, you can take partials here. It's all up to you how you want to manage the trade, but as long as you understand what market structure is showing you, because here is a clear introduction to starting. It's a clear start for a bearish move, okay? Because we've got new lows forming, right? New higher lows forming. And that's exactly what we expect. And this formation of having number one and number two is what you'll look for when you're looking for a market structure shift. I hope you enjoyed that video, and I hope this helps and clears things up for you. And I'll send without the markings. I'll send the markup for this cheat sheet of AUD USD.